Hey, how's it going, everyone? So today is going to be a SoFi exclusive video. If you are a SoFi bro or a SoFi sister, aka you are a shareholder of SoFi, well, we are brothers and sisters, right? And hopefully you find value in today's episode. Going to be talking about SoFi, like I said. I myself, or I should say, welcome if you are new. I cover a lot of different stocks in this channel, and for me personally, I've been a shareholder, a long-term shareholder now of SoFi since February 2024. I have a massive position of SoFi on my private profile, and I have a massive position of SoFi on my public profile as well too, which is available on other videos on this YouTube channel. But today I kind of really want to dive right into an article that just came out around SoFi, which is very relevant and very valid, and also goes off of their earnings that they ended up just dropping a little over a week and a half ago now. And then I kind of really want to go over the charts as well too, pretty much look at SoFi, go over some key areas that I myself will be buying more shares. Understand that I'm not a financial advisor. Everything that I talk about on this YouTube channel is what I'm personally doing. So when I say levels that I would be buying shares, that's based on my own strategies. Obviously, everyone is different, and at the end of the day, you yourself have to build an own strategy around your goals in life, your financial goals, your dreams, and pretty much what you think is going to happen in the market. So I really want to react to this article that came out here 2 hours ago. It is 10:47 a.m. Eastern Standard Time. The market's been open now for a little bit over an hour, 17 minutes-ish. And this article came out 2 hours ago. We're not really seeing a big, gigantic move right now in SoFi, mainly because there's a lot of external factors. Obviously, macroeconomic fears, inflation fears is still really much on the table. Oil is definitely below 85 bucks by, like, let's face reality, not very that much. $85 has been stated by the Federal Reserve to be a very key area where if oil is above 85 bucks, it's gonna affect a lot of inflation data and inflation reports that the Federal Reserve uses to really calculate whether or not they're going to be cutting interest rates or raising interest rates or even holding interest rates. But let's go ahead and dive into this article because I did find this to be very fascinating. SoFi products are growing faster than its members. Now, understand that a lot of these articles that are available around companies, some of these articles are literally just nonsense in my opinion, but there are good ones that are very relevant because they go straight from the earnings and they go straight from fundamental analysis. When it comes to SoFi, I'm a long-term investor because of the fundamental analysis. I'm not trading SoFi. I'm not using technical analysis on SoFi to basically trade it. I do use technical analysis on SoFi to know when the stock is very much oversold so I can pick up discounted shares. And when the stock is very much overbought, it's trading at an insanely high valuation. It's like, hey, for me personally, I'm good with my shares. Even if the stock doesn't come down, at the end of the day, I'm loaded up the wazoo of more shares than initially I was really trying to build a position in SoFi. So I got loads of bonus shares, and that's because, hey, the market's been very, very wonky. But let's go ahead and look at this article here. So, SoFi Technologies rose 2.13% after Piper Sandler initiated cover overweight with a 22 price target. This price target actually came out the other day. I will probably be going other videos onto different price targets, but understand that price targets, it really is a hit or a miss because there are stocks out there that are producing zero revenue and they have like crazy like price targets out there by analysts, okay? Not to mention, believe it or not, there are companies that have actually paid to have articles published about themselves. I'm not saying that SoFi paid someone to make this article, but understand when it comes to articles, you really got to look at them with like a fine comb and understand if they're trying to really prop up the stock or if they're legitimately going off of fundamental analysis, their earnings, okay? So that's basically pretty much the first paragraph in here, because we did get a new analyst come out with a $22 price target. And once I go through the remainder of this article here, I do want to talk about that price level of 22 bucks. So let's go ahead and finish looking at this. About 25 times X is 2027 earnings estimate. The premium rests on what the broker calls a high banking and multiple product attach rate among a higher income customer base. In the second quarter, SoFi's products grew 43% year over year against member growth at 35%. Let me go ahead and just react to that right there. If you are new to SoFi, understand that SoFi is a all-in-one shop. So what they offer to their members, and I am a SoFi member as well too. A member is a fancy way to say people that actually use like their products, aka they have a SoFi checking account, savings account, which I do. They may have a student loan, a personal loan, a mortgage. They may own some crypto, some stock. They may be using other various like financial services as well too. SoFi offers a wide range of different areas, and that's why they're being called a financial institution, not just a bank. And they're also being looked at as being a disruptor company in the banking industry. Okay, so what that means is that year over year, their members are clearly taking advantage of their products. And the fact that their products grew 43% against their member growth of 35%, that's a win-win chicken dinner. Imagine if it was the other way around. Imagine if their members grew 35% and their products only grew, let's say, 23%. That means that, hey, your customers are not using all your products. So right there and there, that is very, very bullish in my opinion, which Piper Sandler reads as existing members buying into offering beyond the lending product that brought them in. Lending still accounts for 52% of revenue, with financial services at 39% and technology around 9%. I'm going to react to that right there. So the reason why SoFi is a hybrid company is because a traditional bank makes all their revenue just about from their lending side. SoFi has 52% from lending, but the rest of the 48% there, it's coming from other places. And that is making SoFi be a hybrid, which is what we want and what I want to be invested in SoFi. And it's one of the reasons why I am invested in SoFi as well too. So that's ultimately very, very bullish, especially if you are a SoFi bull like me. Lending still, the broker model, a 22% revenue compound annual growth rate, and a 27% for adjusted EBITDA through 2028. SoFi right now is currently on a growth cycle, and they're guiding out to 2028. So if you are new to SoFi, understand the company is on a growth cycle right now, and that's why you see 2028 repeatedly, because the management team has guided to 2028. Forecasting revenue of $4.89 billion this year and $6.14 billion next, with earnings per share of 63 cents and 88 cents. SoFi's total capital ratio was 18.8% at the company level and 15.3% at the bank, against a 10.5% regulatory minimum, which Piper Sandler says leaves room to expand the balance sheet. The risks it flags are credit losses accelerating, rate volatility hitting loan demand, dilutive acquisitions, and spending that doesn't convert. On the technology segment, the swing factor is whether growth reaccelerates after Chime left Galileo platform. So to really comment on a lot of this stuff, understand the way SoFi does its balance sheet. A lot of people don't really understand it, but what SoFi does is they originate loans and then they go ahead and sell those loans to get off their balance sheet. This has been stated by Anthony Noto many, many times. It's really what de-risks SoFi. But at the same time, here's another risk too. Loan demand. Pretty much interest rates are elevated, and they have been. So that's definitely could very well be stopping people from actually taking out loans in the future. But we're kind of really seeing the opposite with SoFi, is that their business model is going up, not really down. Now, some of this stuff I really don't agree with, such as the red flags. Dilutive acquisitions. So yes, SoFi has done acquisitions in the past, such as their tech platform, Galileo. Obviously, Chime is a publicly traded company. They ended up leaving the platform, which ended up affecting SoFi's balance sheet in the previous quarter, not this past quarter. And it did put a negative weight on their shoulders. But hey, when you have a large company leaving a tech platform, it's going to affect the company's balance sheet momentarily, right? I'm still very much bullish on the technology platform for SoFi. I just don't believe it hasn't taken off just yet. So let's go back to the chart. I'm on the 1 minute here. Let's go to the daily chart of SoFi. So each one of these candlesticks represents 1 day here. And pretty much right now, we're above the 50-day moving average. We're definitely below the 200-day moving average. But here is something pretty remarkable. And I've been talking about this a lot, especially on this YouTube channel around SoFi. When monetary policy stops being very much uncertain, you're going to see a stock like SoFi very quickly get back to the 20s. Very quickly. Is it possible to move there with momentum? Well, if we look at the charts here, Relative Strength Index, the RSI on the bottom screen, is at 52. Whenever the RSI is pretty much smack dab in the middle, it's pretty much a coin toss. Do we have room to go down? Yes. If we were to go down pretty much below, I want to say 17 bucks. I mean, if we go back down to $15, I'll buy more shares. I ended up buying shares when SoFi dipped because of earnings. $15 in SoFi is a steal of a deal, in my opinion, for me and my investing strategy around SoFi. Even honestly below 17 bucks, it's a buy, in my opinion. But I mean, ultimately, below $20 is a phenomenal buying opportunity if you see a long-term vision in SoFi. If you're a trader, especially a short-term trader, this honestly might be kind of, there could very well be other opportunities. But from taking a long position, I mean, you could look at SoFi and say, hey, right now at current levels at $18.03, it's a buying opportunity. But for me personally, I have bought a lot of shares below $17, and that's really areas that I'm going to be adding to. But on the flip side, do we have room to move up on the Relative Strength Index? And the answer is yes. When the Relative Strength Index gets above 70, it's overbought, which means it's trading a little rich on a technical analysis basis. Okay? Now, if the Relative Strength Index is below 30, it is oversold, which means it's trading very much below. So understand that if we get good news wrapped up in the Middle East, some good news from the Federal Reserve about no rate hikes, we could see SoFi move very much higher. Now, here's a remarkable thing about SoFi on the weekly chart. I love using the weekly chart, especially when taking a super long position like I am on SoFi. So on the weekly chart, we are pretty much smack dab riding the 100-day moving average. Obviously, the 50-day moving average, pretty funny, is above 20 bucks. On the RSI, we're at 48, so right smack dab in the middle. On the weekly chart, it takes a lot longer to very much be overbought or oversold. So, in theory, we have room. Yeah, we have a lot of room. We have a lot of room to very much move higher to 20, 21, 22. I hate saying it, but hey, we have room to very much move lower. Imagine if SoFi were to go down to 13, 14 bucks. I mean, obviously, it would have to break a lot of key support right around $15 and pretty much I think the bottom on here was about $14.90, pretty much right after earnings, like, which is just crazy. Not more than a couple weeks ago. But yes, understand that there is volatility with SoFi. So I'm going to wrap up today's video with this. As a SoFi long, I have a long-term vision for SoFi. The management team continues to execute. It makes me feel good. It doesn't make me feel bad. It really is just a waiting game. We have macro environment fears. Macroeconomics 101, for those of you that aren't familiar, is anything about monetary. So when you hear the word macroeconomics, remember money. Money. How does it affect money? Inflation, deflation. Deflation would be pretty much a recession. Microeconomics, supply and demand. Microeconomics will be an example of Micron memory stocks. Pretty much not enough supply, way more demand. Prices go very much higher, right? SoFi is having a macro environment issue, not a micro. So when the macro environment clears up, yeah, it's going to be a good feeling to be a long, especially for myself. Let me know down below if you're a SoFi long. If not, like I said, smash the like button, subscribe for more videos. I put out videos on this YouTube channel Monday through Friday. Free educational content on Saturdays. Take it easy, everyone. See you tomorrow. Later.